In the world of crypto, some moves are impossible to ignore. Every so often, a single transaction sends shockwaves through the entire market, making even the most seasoned investors sit up and take notice. Recently, the Shiba Inu community was rocked by a massive transfer: 600 billion SHIB tokens sent to major exchanges. This wasn't just a routine movement of funds, it was a seismic event that immediately caught the attention of analysts and traders worldwide. This wasn't just another transaction, it was enough to make even veteran traders stop and wonder. The sheer scale of the transfer raised eyebrows and set off a wave of speculation. When so much SHIB moves at once, the big question is, who's behind it and why now? Was this the action of a single whale, or a coordinated effort by multiple large holders? Such a transfer signals that a whale, someone with huge holdings, might be preparing for a major move. In the crypto world, whales have the power to sway markets, and their actions are closely watched for clues about what might come next. Is it a sell-off that could crash the price, or something more strategic? Could this be a calculated play to manipulate the market, or, perhaps, a move to provide liquidity for an upcoming project or partnership? The uncertainty has the entire SHIB community on edge, sparking intense speculation across social media. Twitter threads, Reddit posts, and Discord chats are buzzing with theories and predictions. Shiba Inu isn't just a meme coin, it's backed by a passionate community, the SHIB army. Their enthusiasm and loyalty have helped SHIB weather storms before, and now, they're rallying together to make sense of this latest twist. That's why this event is more than technical, it's social too. The community's reaction can influence the market just as much as the numbers on the screen. Theories are flying. Is this a prelude to a big dump, or is it about providing liquidity for a new project? Some even wonder if it's a sign of insider knowledge about upcoming developments. The lack of explanation only deepens the mystery. With no official statement from the sender, the community is left to piece together clues and speculate on motives. To understand what's really happening, we need to dig into the data, market trends, technical signals, and community sentiment. Only by analyzing these factors can we hope to uncover the truth behind the transfer. This transfer is a puzzle and everyone's watching for the next piece. Each new development could provide a crucial hint about what's coming next for SHIB. The initial reaction? Shock, followed by a frenzy of speculation. The market is holding its breath, waiting to see if this move will trigger a cascade of selling or open the door to new opportunities. Why move so many tokens to an exchange where they're easiest to sell? Is this a warning sign, or could it be a clever setup for a future rally? Is a crash coming, or is this a setup for something bigger? The stakes are high, and the outcome could reshape the landscape for SHIB holders everywhere. The answer could shape SHIB's future, and the entire crypto market is watching. What happens next will be a defining moment for the Shiba Inu ecosystem. Let's break down what this could mean for Shiba Inu and explore the possible scenarios that might unfold in the days ahead. To truly grasp the impact of moving coins, let's talk about exchange inflows and why they matter so much in the crypto world. Moving coins from a personal wallet to an exchange is a lot like taking cash out of your safe and bringing it to a busy market. When you do this, you're usually planning to spend, trade, or sell that money, making it available to others. When whales, those with massive holdings, move huge amounts to exchanges, it often signals a potential sell-off. This can trigger a chain reaction, as other traders notice and may rush to sell too, which can drive prices down quickly. Imagine flooding the market with apples. When there's suddenly too much supply, prices naturally drop. The same principle applies to cryptocurrencies. But selling isn't the only reason coins move to exchanges. Sometimes, it's about providing liquidity for smoother trading, preparing for staking opportunities, or getting ready for new features and token launches. The real question is, what's the intention behind this move? Is it a strategic play, or just routine activity? A 600 billion SHIB inflow is definitely a red flag, but it's not a guarantee of disaster. It's a warning sign, not a prediction. It's a signal to pay close attention and watch for volatility, as big moves can shake up the market in unexpected ways. Are prices already falling? Are investors panicking? Or is the market absorbing the shock calmly? These are the questions to ask. Only by looking at other indicators, like trading volume, order books, and market sentiment, can we interpret what this inflow really means for the future. Let's dive deeper into the technicals and uncover what's really happening beneath the surface. Traders rely on technical analysis to predict what's next, and moving averages are key. A moving average smooths out price swings, revealing the real trend. The 50-day and 200-day moving averages are crucial. Above them, bullish; below, bearish. Before the big transfer, SHIB might have been showing strength above its 50-day average. Now the influx of tokens is a major test. Will SHIB hold the line or break down? If the price drops below the 50-day average, it could signal a shift to bearish momentum. Watch for a golden cross, bullish, or death cross, bearish. When these averages cross, big moves often follow. This transfer makes these technical levels more important than ever. The market's next move could hinge on whether SHIB can stay above key support. Technicals are only part of the story though. Let's see what the derivatives market is telling us. Beyond spot trading, the derivatives market offers a unique window into where the so-called smart money is placing its bets. Here, traders aren't just reacting to price, they're anticipating the next big move, often with significant leverage. This is where market sentiment becomes visible in real time, and where the stakes can be much higher than in traditional trading. Open interest, how many contracts are open at any given time, spikes when traders expect big moves. It's a signal that more participants are entering the market, and that volatility could be on the horizon. After the SHIB transfer, analysts immediately check the data. Are traders betting on a crash, or are they positioning for a dramatic rebound? This kind of activity can reveal the collective psychology of the market. If open interest jumps sharply, it means big players are positioning for action, either shorting for a drop or longing for a bounce. These moves can set the tone for the entire market, influencing smaller traders as well. Liquidations are key. If leveraged traders bet wrong, their positions get wiped out, causing rapid price swings. This can create a feedback loop where forced selling or buying accelerates the move even further. A whale sell-off could trigger a cascade of liquidations, accelerating a price drop and sending shockwaves through the market. These events can unfold in seconds, catching many traders off guard. Knowing where these liquidation levels are helps traders anticipate sudden moves. It's like seeing the fault lines beneath the market's surface and being ready when they shift. This transfer puts pressure on leveraged longs and makes the market more fragile, increasing the risk of sharp, unpredictable swings. The derivatives market is a high-stakes game, and this move just raised the ante. Every decision here can have outsized consequences, both for individuals and the broader market. But history shows these moments can play out in unexpected ways. Sometimes, what looks like a sure thing can quickly reverse, surprising even the most experienced traders. Let's look at past SHIB cycles for clues and see what history can teach us about navigating the risks and opportunities ahead. SHIB has faced dramatic moments before. Huge rallies, steep crashes, and massive token moves. Remember when Vitalik Buterin burned most of his SHIB and donated the rest? The market feared disaster, but it became a turning point. Past large transfers didn't always lead to crashes. Sometimes they sparked new rallies. In bull markets, big sell-offs were often absorbed by eager buyers, fueling the next surge. The key context and timing. Is today's market strong enough to absorb another 600 billion SHIB? Comparing current trends to past cycles helps us guess, is this the start of a correction, or just another shakeout before a rally? History doesn't repeat, but it often rhymes. Some holders panic and sell, others see opportunity. The outcome depends on market strength and community resolve. Now let's weigh the bearish and bullish cases. Every big move has two sides, bearish and bullish. The bearish case, 600 billion SHIB on exchanges, could mean a whale is ready to cash out, triggering a price drop and panic selling. If key support breaks, automated liquidations could accelerate the fall. Sometimes fear itself causes the crash. But there's a bullish angle. What if the tokens are for liquidity, a new product, or a major partnership? Sometimes whales move tokens to shake out weak hands, then buy back cheaper. Official news from the SHIB team could flip the narrative instantly. The bullish case depends on there being more to the story than meets the eye. Until we know the real reason, both scenarios are in play. The market is holding its breath. So, what should you do next? The 600 billion SHIB transfer is a turning point. The next big move, up or down, could happen fast. For holders, this is a time for strategy, not panic. Watch for official updates from the SHIB team. Their response could change everything. Silence breeds fear, but clear communication can calm the market. Track the data. Are tokens being sold or just parked on exchanges? Stay informed, avoid knee-jerk reactions, and follow trusted sources. Crypto is driven by tech, psychology, and a few big players. This event could be a storm or a breakthrough. Your response should be based on research, not emotion. Stay tuned as the story unfolds with Crypto Insider.